All right, all right, all right. Alright, so we're live, we're live, we're live. Give me my little mic check. Everything's looking good. Everything's green. Let's get Bloomberg going.
Of 1% on the S&P. Want to fit in some morning calls as well, so let's get to that. First up, Citi raising its price target on Microsoft to 605, expecting growth in the company's Azure cloud service. That stock is down by 0.25%. Your second call from Baird downgrading United Health to neutral, seeing risks to the path forward in the company's long-term trajectory. And your third and final call from Bernstein raising its price target on Disney to 125, noting the stock has been on, quote, a roller coaster over the past 3 years. Let's stick with Disney. The CEO, Bob Iger, saying he plans to hold on to the company's traditional TV assets after streaming competitor Warner Brothers Discovery announced plans to split in two. Joining us now to
Should get higher prices today, man.
Intelligence. Keith,
Ideally.
What's the difference in approach between Disney and a major rival?
Yeah, thank you so much, John. So really, the difference is the
Go
amount of
live.
exposure that Disney has to the linear TV ecosystem.
Let's get the links out there, man.
Much smaller than some of its rivals. So you think about Warner Brothers Discovery, for instance, which announced that split just a few days ago. About 85% of their profit last year, John, came from the TV networks. Compare that to Disney at about, under 10%. It's a really different story. For Disney, it's really all about their parks business. About 55 to 60% of their revenue, really, or rather of their profit, comes from the parks. So TV not such an important part of the puzzle for them, really.
There is a puzzle, a piece of the puzzle on the TV side that's finally fitted into place. It's Hulu. Geetha, what's going to happen now? Disney has got its hands around it completely.
Yes,
All right,
now they have
cool.
100% control
Let's see what happens with CPI today, man.
33%, so one-third of it was owned by Comcast.
Let's see.
There was this fear out there that Disney
To be honest, CPI can go either way,
kind of finally closed the deal at about
but
5 billion, but that number came in
I
much
do
lower
think
than
dollar's gonna
expected,
come down.
close to 440 million. But really what this is
I
all
think we just got to go for this high we created last Thursday, you know?
and with them getting Hulu, full control of Hulu, they can integrate it into the Disney Plus bundle, into the upcoming ESPN product. And remember, right now the game in streaming is not about subscriber acquisition, it's really about subscriber retention. And gaining full control of Hulu allows them to do that. We know that having bundles curbs churn by something like 40 to 50%. So this is really what Disney's
Wow, 40 to 50% cuts that much churn.
We're reaching the limits of my price tolerance, that's for sure. They keep putting prices up. In a moment, we'll get US CPI.
Disney.
Across the industry that falls under your coverage, how much consumer pushback are you witnessing, if any, at all?
Yeah, there definitely is. I mean,
Just take a look. Let me take a look at Disney.
Winners, in Netflix.
Do I have Disney here? No.
A little bit in Disney, which obviously have much more pricing power. But then you look at some of the other services. You look at a Paramount Plus, for instance, or a Peacock. Obviously, they have very little pricing power. So we are kind of definitely reaching that point. But then
Disney Plus, $8 to $16. Netflix, $9 to $18. That's like a 50% increase in streaming prices. Prime's gone from $9 to $12. Money data, everyone watching. Hulu, $12 to $19.
Still being able to take those price increases and keep their subscribers.
I mean, Disney's upside is not bad at all. Disney's upside potential, all-time highs, 75. That was peak pandemic. Press and hold. What am I pressing and holding? So that was peak pandemic, start of pandemic. That's around lockdown. Coming out of lockdown.
Mike, are they saying it gets worse, not better from here?
Oh yeah, gets worse from here.
It gets worse from here.
We don't know what the reciprocal tariffs will end up being, but we've already got the
Guys, I think the dollar's about to dump, man. I'll be real.
pharmaceutical tariffs coming, lots more tariffs to come, and that will just continue to add to the prices that you have to pay.
Mike, stay close. 6 minutes' time. Mike McKee's going to break down that economic data for you. Greg, just to come back to you. Mike's saying the base case right now. Consensus view might be wrong. Gets worse, not better from here on the inflation front. Do you agree?
Absolutely agree. It's way too early to be definitive drawing a conclusion. It's like the amuse-bouche of what inflation readings. We have a lot more courses in front of us, and this is very early on. This is just a little bite.
Not exactly tasty stuff, is it? Last
Money day gift, bro.
from the Federal Reserve, there was almost a dovish celebration that they viewed this, implied by the forecast, as a one-off hit, and inflation comes back down again in 26. Predates some of the tariff conversation.
I mean, look, if we look at the last time, yeah, Trump started to do all this tariff nonsense, stock market took a dive.
Has to be reactionary to this, right?
So stock market could, you know,
They don't know what they're out in front of. And
drop a little bit today.
you know, you'll continue to see a Fed on hold, waiting.
I mean, let's see what CPI has got in store. We've got about 5 minutes. Gold is, you know, continuing to push to the upside. Really unlucky with the buys yesterday that it didn't continue,
So I think that would be
right?
to the market.
But bottom story is,
By any stretch, but you know,
Gift says, has he started chatting about tariffs again? Yeah, Trump started talking about tariffs again, my bro.
that you know it is a
Daily picture for gold, you know, just bullish, 8 hour. Even when you look at the intraday price action, you know, I would like to see gold dump off before pumping. Because at the end of the day, like I've been saying, gold buys, gold buys, gold buys. But the buys inside of here have been tricky. They've come at unreasonable periods of time. Like, you know, if we look at this, this is midnight. We look at this pullback. That's 1 in the morning, right? Another late pullback. And if we look at this, this is the only semi-decent pullback that we've had so far. But to be completely honest, this is coming prior to CPI being released. And it's like you don't really want to be involved in this prior to the news release, you know? But then again, you know, high risk, high reward. If that's your style, that's your style, man. But I just wouldn't do it, to be honest. Disney, I might have to look at Disney, you know. We had a jump 6th of May. That's a huge jump, okay. That's a 12% jump. Alright. When I look at GU, GU's not giving me very strong bullish sentiment. So price can do either or for GU. AU is looking bearish to us. Oh my goodness. AU is looking incredibly bearish. Daily is still bullish, but everything else is looking incredibly bearish for AU.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets?
All right, guys. Let's see what's cracking, man. What am I looking out for? EU is realistically somewhere to get an entry. Obviously, we got this 30-minute imbalance. I'm gonna see, you know, how we react inside of there. Right, if the dollar is gonna dump off. There's a similar image here. We don't necessarily have to come to the 30-minute imbalance. We can react out of the hourly. Woo! Look at that dump. Oof. 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 Guys, it's looking silly right now. What a pump. Oh my goodness, it's about to go down. You damn right, Gift. God damn. God damn. Yo, that is a serious pump, my people. This pump is giving NFP vibes. All right.
The forecast was for a 0.2 rise in the headline and a 0.3 rise in
Let's check out the data here, guys.
year-over-year number. We do go
Why is this not loading?
year-over-year basis to 2.4%.
Excuse me. Why is this not loading?
Headline, the core stays the same, 2.8%. So if there is
Oof.
a tariff effect,
That's a serious pump, man.
according to the
Let me get the data.
index for shelter rose 0.3% in May, same as it did last month. That's the primary factor for the all items monthly increase. Food, though, did go up 0.3. That was expected. An increase was expected there. Energy declined a full percentage point as gasoline.
Wow.
That suggests that.
Okay, so CPI here, guys. Forecasted was 2.5. The prior data was 2.3. The actual data that came out is 2.4%. Okay, so it's a 0.%, okay, worse than expected. Okay, so essentially, CPI is the change of prices and goods. It's just used to maintain price stability, yeah? So long story short is a reading stronger than forecast is generally positive, or a reading weaker than forecast is generally bearish. So obviously, you know, the forecasted was 2.5%, and the actual data that came out was 2.4%. Thus, it is weaker or generally negative for the DXY, yeah? So that's part of the reason why we're currently seeing a jump up on gold, a jump up across majors, and a dump off on the dollar. And to be honest with you guys, I'm happy we're finally getting out this range. We've been in the range this whole week. It's not been nice. But now the question lies, you know, will this allow us to get an entry? You know, which again, it's another question. Do you know what I mean? Because at the start of the week, I said to you guys, like, look, it would be nice if we took out this high here, right, which was Wednesday's high, and I don't think we took it out, but we did end up taking out Friday's high, which was the high, which is the high of this current week, right? We had a pullback yesterday, lower Asia session consolidation, and now we've just continued to stretch. My only thing now is, you know, this low, I would like to see, you know, an opportunity to get in before Thursday's low is taken. Because with this current move now, you know, for me, that confirms we're heading down, right? That, for me, confirms we're heading down, at least for the rest of this week. That is going to be my target of the week, is this low here, right? Thursday's low on the DXY is my target of the week. So if we're able to find a potential entry, whether that's EU, whether that's GU, whether that's on gold, if a better picture, you know, presents itself, I will take the buy, okay, with a lot more conviction. Do you understand? Gift says you're spot on with the buyers, bro. Yeah, I feel like it was pretty obvious, you know, with Trump's speech yesterday. I think it was pretty obvious.
But the numbers are bigger now. All around the world, tariffs, bigger tariffs on China.
Bitcoin's jumped up.
From And so we think there's a big difference there. Also muddying the waters, though, we know how much front running there was before the tariffs coming in. So is that going to change a little bit the pricing dynamic?
Let's take a look at GU. What's GU doing? Yeah, GU's had a jump as well.
I agree with Seth. I mean, it's way too early.
Okay, so what I can see right now is there's potentially more upside potential on GU.
The one question I have for Seth,
right? GU's definitely got higher targets.
two components: the housing component, which is key because that also
It's about 70 pips to the high.
and then the service sector.
Yeah, I don't think we're gonna get a chance, fellas. We're about 20-ish pips from that Thursday high for EU. But to be fair, look, we can then target the high of the week, okay, or high of the week starting on 21st of April. Essentially, all we're looking for is just a new high, really. Gold is out of here, flipping neck, no reversal. There will be a reversal, my bro. There will be, don't worry. Well, not a reversal, but a re-entry. There will be one, man. It's just annoying because we've just had 4-hour plays, man. When you think about it, it's just been test on the 4-hour gap, push up, pull back, test again on the same gap, new high, pull back, test on this 4-hour candle, pushed up. There might not be a pullback, you know. There might not be. I'm looking at this current 4-hour candle and it's looking strong, man. This 4-hour candle is giving me the same vibes as, you know, these type of candles, you know. And usually for gold, when you get these type of pushes or these drops, they just continue. All right, if volume is strong, I'm gonna look for a continuation. Yeah, if volume is strong, I'm gonna look for continuation.
The median estimate in our survey 0.2 on core. Taking out food, taking out energy, it came in at 0.1 against the median estimate of 0.3. Mike McKee standing by. Mike, I want to come back to you. You've been digging through the details. What's the source of this downside surprise?
You know what? Vel sent out signal go buy before the news. I didn't want to take it. Didn't want to risk it. Fair enough. I mean, it's not every trade, you know, you have to take, my bro. But obviously this time it worked out. So, you know, it's probably going to have you feeling a certain type of way right now.
But a couple of other areas that did surprise. We saw a slight rise in home furnishings, about a 0.2%, but apparel is down by 0.4. That was expected to rise. And here's the real surprise in these numbers. Used cars and new cars both fell in price by 0.5 percentage point.
Nasdaq's jumped, S&P's jumped, Dow Jones jumped.
Airfares were down as people kind of expected, given the travel.
Okay.
2.7%. So there are.
You know what, guys? There's actually nothing we can do right now.
I was going to mention, John, you were talking.
To be honest, there's literally absolutely nothing we can do right now because markets has already moved. Guys, if you're watching the stream, let's interact in the chat box, yeah, in the live chat. Let's have a conversation and like the stream whilst you're here as well.
Companies selling out of the inventories that they pulled in, that could be one of the explanations for not seeing kind of the tariff effect that we thought of.
Did you see the moves during Tokyo sesh? Yeah, bro. I had a little glance at gold and whatnot during Tokyo. And I was like, I know you're going to move during Tokyo, but can I be bothered to trade Tokyo? And the answer was just no. But, you know, from looking at this, we had a really nice play into this 5-minute candle. Really, really nice play. Right? This is the type of play we were looking here. Right? But we had a really nice play here and a continuation higher. This candle's about 30. You know, these are the size of candles we used to catch, you know, a few months ago. 35 pips, you know, for around 100 and let's say 140, 45 pips, yeah.
The equity market's positive by 0.4%. Just move to the bond market though. This interesting move here.
Look at that.
What the 30-year is doing this morning. People like Greg would call this a bull steepener. Rally at the front end of the curve. Yields dropping by 6 basis points, and a 30-year basically doing nothing. What does that speak to?
This speaks to everything we were talking about, which is, you know, all the concerns manifest in the 30-year. Right? So
guys, this is definitely giving me. We've got to wait till NY, see if there's anything. right? Because with these moves, that's kind of already gotten out of the range. There's nothing much we can really do as per right now, except for listen to Bloomberg and what the experts are saying.
A 30-year supply coming tomorrow afternoon, 10-year maturity.
But I'll be honest with you, for most of the stock market, it does look like we're heading for all-time highs, you know?
That unlocks some dollar weakness. Euro dollar right now 114.75. Joining us now to extend the conversation.
Stock market looks like it's heading for all-time highs, new, fresh all-time highs as well.
To the data we got about 10 minutes ago. Was that a surprise to you, sir?
Not too much of a surprise as we were going into
You know, very, very fresh all-time highs.
We were looking at a lot of the different industries, and there's a sogginess in the economy which is really preventing prices from going up. I mean, one of the things that I was struck by was that both airline fares and hotel lodging were down. And that really jives with the fact that, you know, people flying and people staying at hotels in terms of occupancy.
Let me check the stock market.
Very solidly down
Oh, let me check stocks. Let me see top movers.
I think it's just like businesses and consumers.
Okay, how much gold has gone up 114%.
You know, feel badly about the economy, not sure, and retailers just don't have the nerve.
Healthcare triangle 50%.
Absolutely have to.
Innova Holdings 44%.
Absolutely have to in the next few months because a lot of these retailers work off tight margins. So I think we're going to have a further delay to the delayed reaction to these tariffs. But if the current level of tariffs stick, we do still expect this inflation pressure to rise over the months ahead. And you know, I think by the end of the year, we're talking about a CPI about 3.5% year over year, consumption deflator north of 3% year over year, even though it's taken some time for this to materialize.
David, here's a counterpoint. It comes from Neil Dutta of Renmac this morning, who said if tariffs rates are up and core good prices aren't up by as much as the consensus thought, it implies more margin squeeze at retailers and less price pass-through. Why isn't that just going to be the sustainable story through the next several months? Why does it have to get worse?
Because the retailers won't be able to do it. I mean, these margins are tight, and what they're doing is, you know, for their existing margins.
To be honest, dollar to continue going down, right? That's going to be my, I guess, suggestion when looking at the overall macro effect of these tariffs. If these tariffs don't stop, if there's not a deal agreed, and it's a, you know, a long-term deal, even potentially a permanent deal, you know, the dollar is going to continue to slide. And, you know, we may see pandemic levels for the dollar once again. Like, we may see it. Do you know what I mean? If I look at this, what's this, the monthly? If I look at the 12 month, right? If we look at the yearly chart.
Well, we are seeing a slight tightening in the labor market because, you know, as your previous guest was talking about, that this, I think, is
right on the yearly chart. We are in fact working. Hold on, let me look at the quarterly. Yeah, quarterly is looking crazy, man. Like, potentially, you know, next quarter we may get the dollar rising for a little pullback higher. But for now, the downside potential is still there.
Lower and middle income consumers. I mean, that's what tariffs are. They're tax on imports of goods, and that hits low and middle income consumers. So it depends on the tax bill a bit. But if it,
look, here's my take here. I think today, the direction that we've had today, even yesterday, Tuesday, taking out those highs there on the daily, right? Dropping off, we had a pullback, okay, today, and now we've taken out the lows. I think the rest of the week should follow. You know, potentially Thursday, we'll probably get the high. Let's just say we get the high that tests, right? We get a immediate balance of price. We balance the range, right? AKA the range from this candle's foot, right? This candle's low to this candle's open. If we can get price just push up, test the foot of Tuesday, look for a sell somewhere inside of here, right? Somewhere around this price point. We can then target not only today's daily candle, obviously, which hasn't finished printing, but then we can also target Thursday's daily candle. If Thursday's daily candle is taken today, it's unfortunate, right? But we'll have to target 21st of April's daily candle low. Okay? Obviously, before that, there's the Tuesday's daily candle as well. But I think from the evidence that we're seeing, from the data that I'm looking at the CPI, looking at the current price action that's being printed, right? This is extremely bearish, right? Structure is bearish, price is heading down lower. So I'm going to try to play the shorts on the DXY, aka longs on most of the majors. Okay. I think buys are a good idea now than they were on Monday, than they were yesterday. So we'll work with that.
Reaction function. They might not move, but do you have a decent understanding of how they would move based on incoming information?
So I think so. I think
let's turn up. Let's listen to Bloomberg for a few minutes.
You know, groundbreaking is they've got two mandates. They have to worry about growth and employment on the one hand. They have to worry about inflation on the other. At any point in time, based on the current set of the data and then your best guess as to where things are going, which one's the bigger problem? And react to that one. And so right now, the bigger problem is very clearly inflation. It's come down, but it's still above target. The labor market to date is fine. Where are things going? Well, we start to make forecasts. We think inflation's going to go up from here. They probably think inflation's going to go up from here, but we don't know that yet. But until you get that confirmation, there's no reason for them to move. If we're right and inflation does go up, like I think is the consensus, before the labor market starts to slow, before spending in the economy starts to slow, well, that just reinforces the idea that inflation's the bigger problem of their two mandates. And so we've been saying for a while, don't count on a rate cut at all this year, because if inflation keeps drifting up before
no rate cuts at all this year,
for them to just sit on their hands at the current level of policy rates.
Greg,
that's
Peter,
interesting.
Sitting on your hands through the summer is one thing. Through the year is another. Are you expecting them to sit on their hands through 25?
You know, it's data-driven, of course. That's my out. But we've been kind of penciling in 2 cuts just to get to kind of the top end of neutral. But it's a complicating factor. I think it's how you position the inflation. Clearly, they're going to be hesitant to use
rate
the word
cut is basically talking about the interest
but
rates.
There is this belief that it's a one-time
one of
shock
Trump's
and
goals
capital
was
through
to
it.
obviously
my read is that
refinance
they will
the U.S.
prioritize
debt.
Growth.
Right,
you know,
and one of the main reasons as to why he started introducing the tariffs, other than to just make a huge ton of money himself, is to force the Fed to drop interest rates. And what that analyst was basically saying is like, look, if inflation is out of control, if inflation keeps rising, if inflation is not doing as well as what they anticipate, then the Fed is probably not going to cut interest rates. And bear in mind, like, you know, most of Europe has been cutting interest rates. We've cut interest rates. You know, the euro have cut their interest rates. But the dollar is still, I guess, stagnant for now. So let's listen to Bloomberg for real, though.
Appreciate it. If you are just joining us again, just moments ago, and welcome to the program, we got inflation data. Downside surprise, 0.1% against an estimate of 0.2. That's month over month on headline. If you look at core and strip out food and energy, that came in at 0.1. The estimate was 0.3. In response to that, equities higher, up 1/3 of 1% on the S&P, up by more than 1% on the Russell. Bond yields are lower at the front end of the curve, unlocking some dollar weakness against G10 currencies. Euro dollar near session highs. I imagine the White House is going to respond soon as well. Bloomberg's Tyler Kendall joins us now for more. Tyler, we call that the right kind of downside surprise, not just for the economy, but maybe for the president too.
Yeah, hey, John, it's going to be a welcome report for this White House and expected to bolster the president's rhetoric when it comes to his tariff plans, particularly on the heels of what was considered to be a pretty big win for this White House last night when a court ordered that they can continue to invoke their tariffs under the International Emergency Economic Powers Act, IEEPA, at least for now until a hearing during the summer. So President Trump is going to probably double down on this message. And as you've been discussing, though, this really does come against the backdrop that this is sort of the beginning for the tariffs. We're not expecting them to go away anytime soon. And we also know those Section 232 tariffs are in the pipeline on the grounds of national security concerns such as pharmaceuticals. And that's why you're also going to see the White House push on that pressure when it comes to getting the House to pass that reconciliation package, because they still want to get cash into consumers' pockets as quickly as possible to get ahead of any certain tariff impacts here. That's really why we started to see that front loading of those tax cuts as part of this this reconciliation tax bill because they're trying to sort of front load those at the end of the day, even if there are those deficit concerns down the line.
Tyler, thank you for the update down in Washington, D.C. Tyler Kendall there, Bloomberg's very own. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross back over to Yahara, who has more. Hey, Yahara.
Hi, John. We start by recapping the latest economic data. Underlying U.S. inflation rose in May by less than forecast. It's the fourth month in a row that's happened. Core CPI rose 0.1% from April, lower than the expected rise of 0.3%. Data suggesting companies are finding ways to limit how much higher costs from tariffs they pass through to consumers. Meanwhile, President Trump says a trade deal with China is done. Trump says the U.S. will provide China what was agreed on in talks over the past 2 days in London. Trump added the deal is subject to Chinese President Xi's approval. And SpaceX called off a mission that was supposed to take off this morning. 4 private astronauts were scheduled for liftoff to the International Space Station with NASA and Axiom Space. The launch was delayed to fix a liquid oxygen leak that was found during inspections of the rocket. SpaceX says a new launch date will be announced once the repairs are complete. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. Up next on the programme, we'll set you up for the day ahead. A sneak peek of the calendar through the rest of this week and into next week. Live from New York City, you're watching Bloomberg TV.
All right, let's see what's going on. All right, so gold is dropping right now. EU's pulling back as well. To be honest, I don't really want to fight in this range.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back.
I really don't want to fight inside this range. Like, to be honest, we've got to wait for stock market at a minimum. Right? We've got to wait for stock market at a minimum. If I wanted to take a trade on gold, as an example, I would have to take it somewhere around there. The other thing that's also a bit potentially worrying, yeah, is this 4-hour candle. Yeah. This 4-hour candle can be a potential block. We're getting such a huge rejection from it, but the main reason for the rejection is definitely the dollar pulling back, right? So if I'm looking at this, we may get a pullback somewhere in this area. I'm anticipating the new hour. All right, we've got 8 minutes. New hour potentially forming the low of the hour somewhere inside of this balance range. Right? Somewhere inside of here. And then we can get the new high of the hour and target, you know, this current hour. That's what I'm thinking right now. Yeah. But this is pulling back like crazy. Could take a little cheeky buy. I'm taking a cheeky little buy. My stop is going to go, what is that? My stop is about 100 pips. I'm literally still in an EU buy for the longest time. I've taken a small buy here on gold. Let's just see what it does inside this 5-minute area. It's about the high of the hourly candle as well. And to be honest, if we take the buy from there or around here, we give it about 100 pips. Alright, so about there. I don't think it's bad at all. I don't think it's bad at all. If you don't mind a bit of a higher risk position, I don't think this is bad at all. I still do think we'll probably get something closer to stock open anyways. But because we've pulled back down into this range from low to high, well, low to this high, I'm going to take a little small buy. I'm going to anticipate the next hour kind of exploding up. Tariff derangement syndrome. Listen to this, guys.
Tariffs, and we're not even seeing it in the data just yet. I expect the President of the United States is going to take a similar tone to Neil Dutta shortly, Jonathan, on Truth Social when he wants to talk about those inflation figures. And then all of this, of course, has to do with what's going on with trade. The president talking about these talks that we had in London, more than some 20 hours at the negotiating table between the U.S. and Chinese delegations, and basically talking about the fact that they just want to implement what they agreed upon 4 weeks ago. What's key in the president's truth, though, this morning is that the rare earths will be supplied upfront by China, and he pretty much said that is going to happen immediately. So that is something that is music to the ears of these companies that need these micro metals, and China has complete control, really, on this supply.
Anne-Marie, appreciate the update. Head to the airport and we'll see you in the studio tomorrow morning. Anne-Marie Horton, thank you. Looking forward to catching up with you.
This candle's looking crazy, guys.
Investors certainly rewarded for selling the fear and buying the hope. A 20% plus rally on the S&P 500 off the April low, and it continues going into the opening bell. Coming up tomorrow, Francis Donald of RBC, Sarah Hunt of Alpine Saxton Woods, former Fed Vice Chair Richard Clarida, and Lindsay Rosner of Goldman Sachs. From New York City, this was Bloomberg Surveillance.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm lucky man because not everyone should have the experience of the war and peace, poor and rich.
All right, guys. So currently, gold is just dropping like no one's business, yeah? Like I said earlier, I've just literally added one more buy to gold. Because I do still see this pushing up, but this candle is looking insane right now. Yeah, I just added another buy on gold. Smaller buy on gold. I'm going to add a buy on gold here too. Because here's the thing, yeah. If gold breaks this low, right, aka this low here, then it's looking dark, right? It's looking dark in the sense that gold is probably going to keep dropping. And I don't think gold is going to keep dropping like that. I think right now we're having a little bit of a liquidity grab, a little bit of a. I feel like, sometimes markets, will give you headache when it comes to getting the last pullback or the perfect entry or, the most ideal discounted price. I feel like right now with this dump off that we're currently getting is like just that final area. Do you know what I mean? That last area. Where it's like after markets have moved, you go back, you review your trade, and you're like, damn, okay, this was probably the best place for me to buy. Because realistically, if I'm thinking about taking a buy, I shouldn't really be taking a buy up here. Do you know what I mean? I should be taking a buy in discount. And this is currently where discount is. So I am leaning more on the side of I'm okay with taking a loss from taking a buy inside of the discounted range rather than as market's been pushing up. Do you get what I'm saying? So I've taken a couple of buys. And let's see how it goes. If you guys want to take a small little buy too, you're more than welcome to do so. I feel like this little area here as well could potentially give us something. If it doesn't, it doesn't. Do you know what I mean? Let's not. You don't need to kill yourself, guys. If it doesn't, it doesn't. If it hits stop, it hits stop. It's not the end of the world. Well, yeah, if this push up starts to look a lot better, then we can look for potential re-entries as well to stack in a couple of buy positions. It's possible. Do you know what I mean? But the real thing that I'm looking out for is, how this hourly candle's closed now is not the best, right? I would have preferred a more of a full-bodied candle. Remember, wicks do the damage, bodies tell the story. And the body of this candle, instead of it closing outside of this imbalance, is now literally held it. There's a potential that this candle can flip bearish on the hourly and engulf the lows, right? That is a very real potential situation. That's what I don't like about this, at least for now. But what I'm currently working with is understanding that the DXY is bearish. We're looking for lower prices. We don't know exactly when, or there isn't a confirmation right now, shall I say, telling me that, hey, this is a really good time to buy majors, right? Look at that. Look at that candle. You see? See what I mean? Look at that hourly. So right now we're in. We just got to leave it. We just got to leave it. I'm just leaving it. There's no real clear, decisive price action right now. This is giving me yesterday's PA vibes. Yesterday was kind of iffy. It was kind of like 50-50-ish. It wasn't really anything to scream home about. But I'm just going to take... Well, I've already taken it anyways. And let's just work with this and see how it does here, guys. Right now, the dollar is continuing to push all the way straight back up, which obviously is not helping gold right now. But I feel like if we can wait for NYSE, we might be in with a chance here. You know what I mean? Because even with this candle, I like how the dollar's candle's closed. It's closed a lot more bearish than gold's hourly candle. Do you know what I mean? Like it's closed a lot more bearish than gold's hourly candle. The thing that I'm trying to anticipate right now is even if we do get a high of the hour, where is this high of the hour going to form? I kind of want to hold on a little bit here. So that's one of my reasons as to why I've taken this trade and putting the stop at this low. Because I don't really want to see price at this low. I don't think we're going to hit these lows. If we hit these lows here, obviously this is the news low. No, it's not the news low. The news low is, we've already taken out the news low. But if we hit these lows here, then we're just wrong. We're just wrong. We're literally just wrong. And that is what it is. Anyways, guys, I'll be back.
percentage drop in U.S. history. Jones became a gold bull in the aftermath of the GFC and bought Bitcoin as the money printer went burr during COVID. He also founded the Robinhood Foundation in 1988 and has helped since then to raise nearly $3 billion to get New Yorkers permanently out of poverty. Paul Tudor Jones, co-chairman and chief investment officer of Tudor Investment, joins us now on set. Paul, it's great to have you here.
It's great to be here.
Thanks so much for joining us. I want to talk first of all, before we get into the markets, economics, and AI, about your philanthropic efforts and specifically a partnership that Robinhood has with Bloomberg in a contest called Pick a Ticker. You have a $10,000 bet, essentially, one long, one short. How did this contest go, and who was the winner?
Well, we did it right. It actually starts right before our investor conference that we hold every fall. This year we had 40 participants. We raised about $400,000 that went, three-quarters of which went to Robinhood. It was fantastic. The winner was Bill Ackman of Pershing Square. He was long Fannie Mae. And number two was a guy named Mark Gallant, who actually used to work for me. And three was Stan Druckenmiller. No surprise, he's going to always be placing. They came in, I think if you took the top 3 or 4 and you had made their bets, you would have made 7 times your money in 6 months. So it's a great competition. I really hope this year we can expand it so it'll be a much bigger group. It's $10,000. It's a 6-month competition, one long, one short, and yeah, it's a lot of fun actually.
Shout out also to Anna Nikolajewski, who got up there on the board with those.
She was our only female entrant. I hope we get a lot more ladies that'll participate this time.
So they have another chance coming up this fall.
Absolutely.
And I thought since we have you here, you could help us. Give us a tip. What's the one long you would hit for the next contest?
I would say probably the yield curve. It just depends on where I think it'll be higher at that point in time. Mine would be very esoteric, so let me think. Well, I would definitely be betting on substantially lower front-end rates. We'll have a new Fed chair within 6 months of that point in time, and I think Trump's going to pick someone who's going to be uber dovish.
Well, let's talk a little bit more about the yield curve. Matt and I were actually emailing at like 4 in the morning about the yield curve because it's broken a lot of hearts,
Right.
that steepener bet. And the way you lay it out, short-end rates coming down, you have concerns about the deficit, potentially boosting the long end. It seems like a no-brainer, but it feels like it just hasn't worked. So what's different this time?
Well, it's working. It's just, it's vol adjusted. It's just a slow-moving train. But I think in the long run, it has to work. We are fiscally constrained, and we're going to have budget deficits of 6% plus as far as the eye can see. So one of the major offsets, if I was the president, would be to lower my interest rate cost by appointing a Fed chair who is as dovish as could possibly be. That's kind of the playbook when you're 100% debt to GDP and you're fiscally constrained. You can see it happening in Japan right now. He's Wade is reluctant to raise rates more than beyond 50 basis points, even though they have inflation. Pick a number somewhere between 2 and 3%. I think they fudge the numbers down all the time. You got wage growth at 3.5% there. So that's, historically the way that you get out of a debt trap is you run the lowest real rates possible. You lower your interest burdens, and I'm sure that's what we'll see beginning when the next Fed chair comes.
Well, we definitely want to talk about who the next Fed chair might be and who you would like to see. But let's talk first a little bit more about the deficit, because it feels like you take a look at the bond market over the past few weeks, the past few months, you can see those fears being expressed. But concerns about a higher deficit feels like one of those evergreen issues out there. So give us first your feel, how you're feeling about the deficit projections that we've been getting, and also how you might invest around that.
Well, the big beautiful bill is really interesting. It's first of all, it's a genius in branding. The name of it's a genius in branding. But I think what you got to do is you kind of you have to go to first principles. What would the actual budget look like if we were trying to balance the budget? If we were actually trying to balance the budget, what administration, maybe it's 10 years down the road. At some point, probably, the bond markets are going to call BS on governments around the world playing chicken with them, right? So, to give you an idea, if you were to balance the budget today, let's assume, first thing I would do if I was president, I'd appoint the most dovish central banker I could to lower interest costs. So let's assume that I could make a pact with my chairman of the Fed that I'm going to go through an austerity package. I'm going to balance it, but I need you to really drop rates to, let's say, 2.5%. So if you drop rates to 2.5% and you get a 50 basis point reduction, or let's say even a 100 basis point reduction in 10-year rates, that saves you $175 billion. The starting gap is $900 billion, so that saves you $175. Now I'm down to $725 billion that I've got to find through tax hikes.
All right, so how we looking? How we looking? We've had a little bit of a push up. This dollar coming down. Okay, so dollar's coming down a little bit. We've had quite a big rejection from gold here. I quite like it, in fact. I'm gonna add a position here. Gonna be a little bit aggressive today. I think there's a little bit of a wee chance in here. Because my whole understanding is, even if we don't, let's just say for example, yeah, right, let's just say for example this is a sell and we're just wrong, right? Let's just say we're just wrong. I don't think we're just gonna sell off without pushing and filling some of this wick. So that's what I'm looking at right now. There's potential here, guys, man. Dollar's turning around a little bit. Taking that. We got NYSE coming in a little bit as well. Should be interesting. Sees 4-hour candle close. No, still printing. Yeah, that's what I'm playing with, guys, right now. If you guys are liking it, obviously like the stream, subscribe if you're new. If you have questions, put them inside of the chat box down below. I'm perfectly happy to have a conversation with anyone. Also, if you enjoy this type of content, more of this content is provided inside of my free Discord. Link to the free Discord is in the description box down below, guys.
recently that he's going to announce some contenders sometime soon. Bloomberg News has reported in the past 24 hours that Scott Bessent has emerged as a pick. Kevin Warsh is under consideration. I mean, if you had your pick, who do you think is best suited for the chair?
Those are two great names. Those are two fabulous names. Again, if I was president, if I just think about President Trump, he's a growth guy, right? He's a loyalty and growth guy. You're going to be my pick if you're loyal to me. You're going to be my pick if you're a growth guy. And I'd pick a growth guy, and probably Scott would be more in line with that than Kevin would. They will have had a really close working relationship at that point. I also think, again, the playbook's pretty clear historically and right now. We are fiscally constrained. We're in a debt trap. You're going to have to run negative real rates to get out of it. That's what we did in the 50s. We had, if you'll remember, we had a variety of prices fixed by the Treasury while we had 5 and 6% inflation for a period of time. We're going to have negative real rates, and that's why you have to think about what is facing our policymakers in this debt trap as you construct your portfolio. So what would an ideal portfolio be in something like that? Well, what has worked so far? What has worked so far has been some combination of stocks, which won't do great, which would do terribly if we ever actually had, if they called us out and the bond market actually gave us an accident that then spilled over. But it would be some kind of...
All right, gold's continuing to push up. It's looking a lot better now.
Probably your best portfolio to fight inflation. Vol-adjusted.
It's looking far better now.
Bitcoin's obviously 5 times that of gold, so you're gonna do it in different ways.
You said at one point you would allocate 1 or 2% of your portfolio to Bitcoin. Is it still?
Yeah, I mean, I think you just...
Right, okay, like I said earlier with the dollar, if we can form the high of the hour somewhere here, and then the low of the hour, we can target the lows. Quick question, yeah, shoot, Gift. So we formed the high of the hour, and we're currently pushing down, so let's see how that does.
To get out of my debt trap. And that's exactly what Japan, who's the most fiscally constrained in the world, doing. And it works until the population throws you out because you let inflation get too hot. So maybe you're in a world with 3.5%.
See how that does.
And 2.5% overnight rate, and you're kind of trying to run hot and grow your way out of it.
Well, let's talk a little bit more about equities. You know, you mentioned in that scenario that you laid out, equities obviously would do terrible, but where we stand right now, I mean, we're back to 6,000-ish on the S&P 500.
If you're new and you're watching the live stream right now, and you're currently enjoying the live stream, don't forget to leave a like on the live. Helps with the YouTube algorithms. Helps the channel reach out to more people. Also, I do have a Discord, which is available. Link to the Discord's in the description box down below, and subscribe whilst you're there.
Negotiations continue to progress. I mean, what's your base case on equities right now?
Again, so a year ago...
Okay, so Gift says, when you have an open trade, what time frame do you look at to monitor the trade, for example, for both gold and dollar at the same time? I may have asked this before, but cannot see anything in my journal. Okay, cool. So what you got to understand, yeah, right? For me, when I'm looking at a position, I've got to understand what is my overall bias, right? Which is why I always refer to the daily. For me, I started to really see a change in my consistency once I focused just on the daily religiously, right? My main bias, whether it's structure, on the daily, 4 hours bearish, I don't care. I'm going to look for buys. Why? Because on the daily, right? Next thing is, let's just say, for example, this trade setup. The reason why I even decided to take a buy off of here was based off of a few things. Okay, one was based off of the CPI data, the dollar, right? Why? Because the dollar's daily structure is bearish, and from understanding what yesterday did, which was taking liquidity to the highs, and then with the CPI data and how we've extended lower is confirmation to me like, okay, cool, you know, there's a higher probability. Remember, everything's probability. There's a higher probability of this extending lower. There's a higher probability of, you know, the dollar going for those lows now, right? So now that I've taken the position, I've noticed gold, you know, pushed up, pushed all the way down. It pushed down a lot more than what I anticipated it to. But why did I take the trade? I took the trade because I understand what CPI has been doing. I understand what the structure's been doing on the higher time frame. I understand what the DXY is doing. Okay, so using those confluences, I've understood like, hey, this looks like a crazy buy right now, but I'm going to enter for a buy anyways. Why? Just because the picture isn't clear doesn't mean my analysis is wrong. Markets is not always going to make it easy for you to find an entry, right? Sometimes it's going to be easier than others, and that's okay, right? So now that I'm in the position, all I'm looking out for, especially on red folder days, are protected highs, and I put that, you know, in quotation marks, protected highs and protected lows, right? Or extreme highs and lows. So what does that mean? Right, when I look at this push to the upside, what is the protected low? Because I'm looking for a buy, right? And my stop is going to be at the low. Realistically, this is the low, even though I started buying from around here, I think. Let me check. Yeah, I literally started buying from around the here earlier because I didn't think we would push, you know, so deep into the imbalance. I started buying from there. But I understood that the protected low, or the low that would invalidate this buy, is down here. Right? These lows here. Realistically, this low. At any moment, if I see the DXY reach for these lows, then I'm wrong. There's nothing more to it. There's nothing less to it. That's it. So for me, if I've entered higher and I'm monitoring the trade and I'm thinking, okay, I want to re-enter, I want to find a better price, and market is still dropping, I am willing to take another entry deeper, right? But remember, the stop is going to be smaller. The stop from here to here, let's say, is 70 pips. The stop from up here to down here is like 150 pips, for example. Yeah. So it's still a better entry with a lower risk, if you think of it like in terms of pip count. And the time frame that you monitor a trade on depends on the time frame that you took the trade on. Okay, I think this is me answering your question more specifically. So for example, if I took a trade on the hourly, I'm going to be monitoring the 15-minute candles and the 5-minute candles, right, to monitor the trade, to see how the trade is forming. I'm going to look at how the 5-minute candles are closing and opening, how the 15-minute candles are opening and closing, what's the next 15-minute candle likely to do, what's the next 5-minute candle likely to do, etc., etc. Yeah. If I took a trade on the 4-hour, I'm going to use the hourly and the 30-minute to monitor how the trade is going, right? I think that answers your question, bro. Yeah. So for me, because I took the trade, the entry, right, parameters were based off of the hourly, right? I'm gonna mainly focus on how the 15-minute candles are opening and closing and how the 5-minute candles are opening and closing. If you took a trade on the 15-minute, you're gonna be looking mainly at the 3-minute candle and the 1-minute candle, basically the sub 5 minutes, right? But for me, right now, let's say I enter based off of the daily. I'm going to look at the 4-hour candles formation and the hourly candles formation. It looks like we're going to be in a little bit of a range here for the dollar. We've pushed up, now we're pulling back down a little bit. I mean, look, in any case, we're about, what's that, 5 minutes from stock open. So we may just chill around till then. I'm trying to just hold on till stock open to kind of just see what the volume is going to be like. I hope you guys all got something out of that. So back to Bloomberg, eh?
You're too young for this, but there was a great Twilight Zone.
Okay.
Great Twilight Zone episode where aliens came down to Earth and they had this, and they hand this book that says "To Serve Man," and everyone goes, "Hooray! They're gonna save humanity. It's a humanitarian guide," and it turns out to be a cookbook.
I was ready to push back, but you called me out. I haven't seen that episode.
Yeah. So anyway, we just had our Robinhood AI Poverty Summit on Monday, which I was at. Oh my Lord, the things that AI are going to do for education. There is no excuse for a low-income kid not to have the greatest education if his parents or caregiver is taking care of them. My gosh, they're going to have an individual tutor to walk them through everything. So it's really spectacular. The downside of AI is that we've been served, right? When I say we've been served, you had in February Elon Musk. You can think what you think of him with regard to his moral compass, but he's the Thomas Edison of our time. Said AI has the 20% possibility of wiping out humanity. There's the safety side that should set off alarm bells throughout the world, particularly in this country, particularly with this administration. And then just last week you had Dario at Anthropic. Amadai,
Okay.
am I pronouncing that correctly?
This current 15-minute candle
So
is
anyway,
not looking
he
great.
said that in 1 to 5 years, we could have 10 to 20% employment
Hourly candle.
because of the
If
displacement
this is going to be a bearish
of
hour,
white-collar
this is a
jobs
pretty
by
good
AI.
area.
So
This is
now
a
we
really
have
good area for us to create the high of the hour
in this
and to
country
drop lower.
in 1 to 5
Okay.
years.
So right
So
now it's
now
not
you have
looking the
this
best.
massive stability
I'm going to hold on
issue.
till
You've got a
stock open
safety
and
issue
see the reaction
and
that
a
we're going to get.
stability issue. And
Just
within
because
the
we're
big,
pulling back
beautiful
down doesn't
bill
mean that we're wrong.
is a
It doesn't mean that this is definitely going to hit stop.
On
Right,
AI
it could hit stop, but it doesn't mean like it is. You know,
my gosh,
price is
that
going to push
is,
up, it's going to push down, but
when you
know,
just
if we
been served-
continue to
and no
see
one-
bullish
see,
structure,
the interesting
then that's
is
good.
no one in the AI community pushes back.
And
on
also,
this,
what you've
right?
got to
Because
understand, yeah, is when
anyone that
markets pushes
understands
down
it
and up, right?
and sees
You know how
it's progressing, these
well, for
models
me
are
anyways,
increasing 1 to 500%.
and if
in
you
their
guys remember the
efficiency
video that I
every
made
form.
on catching continuations on gold, excuse me, to create this kind of bearish down candle, on the lower time frames, markets will have to just crash down, right? Price will just have to slap down, and that's where you get it. So right now, look, we've just created this 5-minute candle, and if I'm looking for re-entries or areas where I can potentially play for a pullback and a test, this is one of the areas that I'll look at, right? Obviously, you know, bearing in mind that we need to see higher prices, you know, we need to see a new leg higher and then a pullback and then potentially take a trade off on that pullback higher. Right, so right now, you know, it doesn't mean that it's necessarily wrong. We just have to wait, really. Ooh, I really don't like this 1-minute candle. That kind of looks a bit crazy. All right, we're about a minute out. Sitting tight for now. Sitting tight. Trying to see if stock market is going to give us some juice to the upside.
Capitalism is so spectacular at maximizing productivity, but it's actually really bad in the tails, I'll say. It's really bad about distributing income in a socially beneficial fashion. The best example can be if we look at, say, since the mid-80s, if you look and see how the productivity gains in the United States have been distributed, it's about 15% to the bottom 90 and 85% to the top 10. And so what happens when you do that? Well, you get the incredible divisiveness that we have right now. We have a crisis of trust in this country. No one knows who to trust. Hell, we had a faction of the Republican Party storm the Capitol in 2020 because they lost an election. So
we're at a really socially fragile time because of wealth disparity, and now we have AI that unless we think about how we distribute those productivity gains in a way. So is it, Dario mentioned, we're going to have a token on every time a model's used. Bill Gates said we're going to, suggested, I think 6 or 7 years ago, maybe we tax robotics.
All right, so stock open is here. Gold's coming straight back down as the dollar has just taken out its high. There's currently divergence between the dollar and the euro. The euro hasn't taken out its low as of yet. But to be honest, looking at the euro, this is progressively pushing lower. Let's see EGU as well. Gold is now dropping like it is hot, which is obviously not good. But I'm just going to sit in this. GDX is dropping as well, man. Oof. GDX is blipping. It's not good. Again, it's like I'm happy to stay in this position. I know we've pretty much come all the way back down to entry, but look, if we're gonna push up, if we're gonna be a buy, at least today anyways, on gold, it's gotta be from here. Like, I don't see us being a buy, at least today anyways. Let's just say we hit stop and we end up, you know, taking out Tokyo low, which is fine, right? Where else could we potentially be a buy from? Maybe back down at the 4-hour candle. That's possible, yeah. But in terms of right now, if we're gonna be a buy from anywhere, it's gotta be here. It's gotta be here. So I'm just gonna sit tight. I'm just gonna sit tight for now. The only thing I don't like is just the dollar. It just keeps going. Just keeps going and going. Mm-mm-mm. 15-minute candles are looking crazy, guys. I just want to see how this hourly candle's gonna close. GDX is okay. GDX is reversing back up. It's a good sign. It's not enough, but it is a good sign. This 4-hour candle's rejection is, yeah, man. It's looking long. It's looking like a long day. Look, even on the 8-hour, we've had a very strong reaction from there. I'm not gonna lie here, guys. If I see gold start pushing up again, I might just add another buy. Dollar's holding up. Dollar just holding that high price. Leo, what are you saying, brother? Long time no see. What's happening, Leo? Are you good? It has been a minute. It definitely has. Did you take a break from your fundeds? Yeah, I did only buy one more. Fair enough. I mean, that's better than what you were doing before. You were buying a bunch of them and gambled it in an hour. Damn, bro. I don't know how you do it, man. How much are these fundeds going for? Like £50? £10? How do you just get funded and just blow them just like that? Anyways, just keep at it, bro. Just keep at it. Keep improving. It's you against you, man. That's all it is. Okay, gold's reversing back a little bit now. GDX is pumping up.
Look, let's just go back to last September when the Fed cut 100 basis points and the 10-year moved higher.
I'm not convinced. I'm not convinced. But like I said, if gold's gonna be a buy today, it's gotta be from here, man.
Sitting there in that range in the 430 to 460 despite this conversation. And, you know, if you do get a Fed chair who's going to be the most dovish to cut, it doesn't mean that the long end will be compliant with this. And I'd be shocked if it were, simply because there are too many interesting data points around inflation that, you know, that we haven't.
Was PA good on gold the last month? It was alright. It was diabolical in ES and NAS. Yeah, I haven't really looked at ES and NAS to really give you much of an opinion, but you know, from what I saw in hindsight, it wasn't. There were some wild moves, but I don't think it was terrible. You know, the good thing about stock market is, you know, sometimes you get these kind of days where it just chops, but once it wants to move, look at this. What's this? Monday, Tuesday, we chop Wednesday, we chop Thursday, Friday, we have a push, we chop Monday, we had a push Tuesday yesterday. We're kind of chopping right now. Yeah, it's true. It's true. 90% of the 90% of opens, market opens, were 3 hours choppy. Yeah, it's true. That I do agree. The open sessions have been very choppy recently. It's more so you kind of got to let markets be for a little bit, and then you can find, you know, a little bit better movement. Guys, this is looking bearish. Gold's looking like it wants to drop lower, man. Alright, so this current rejection that we're getting from this 2-minute area, we may take out this low here, and we may come for this low. Right, obviously, yes, we're on a buy, but I'm going to look at areas where markets may potentially be a sell. Like if I was in a sell, what is a good price? What is good price action that I would like to see? And right now, if I was in a sell, this is good selling price action. So ideally, what we need to do is we need to push above like this 2-minute candle. We need to get above like 33.41. All right, I think if we get above 33.41, there's a good chance that we continue heading higher. For now, we're still waiting for the dollar to do something. We're still waiting for the dollar to do something. But yeah, this is good price action to head lower. It's not good for business.
Right. So I'd say we are not. We take policy as given. So we had lowered our earnings for next year in 2027, and then
Let's see what's going on. Yes, right now.
We actually see the S&P at 65 to 6,600 within the next 12 months. We have a price target close to 7,000 for next year.
Okay.
Earnings are hanging in there.
There really isn't anything clear cut. Obviously, we got this imbalance here on the daily for ES.
We're probably coming in about 265 in earnings for 2020.
But this range is quite tight. I'm not on the side of either a buy or a sell as of yet. Just looking at the S&P. But for now, we are focusing mainly on gold anyway, so we've got to see a bit of a push right now.
There are pain points in retail. There are definitely pain points in some of the leisure stocks and airlines. But that's not what's driving the overall margin. And so in the end,
I think after today's closure, we should get a much easier time, to be honest.
businesses are so strong, and it is the AI revolution.
underexposed, one of the greatest tech, revolutions in the last 30 years. And that's what we're seeing here. So you've got to be in it.
You got to be in it to win it. Alicia, that's a nice place to leave it. Great to see you. That is BNY Wealth's Alicia Levine. I will say on the other side, so you have BNP basically betting against the steepener. Paul Tudor Jones, I wasn't expecting to get right to the yield curve steepener, but
yeah. I was looking for a stock pick, but he said he's not really into individual stocks.
No, he's looking at the yield curve. In any case, let's talk about some individual stocks, specifically quantum computing stocks. They're in focus at the open. That's after NVIDIA CEO Jensen Huang said the industry was at an inflection point. Huang was speaking at GTC in Paris to kick off France's Viva Tech conference.
It's very clear now that over the next several years, or at least the next generation of supercomputers, every single one of them will have a QPU assigned and QPU connected to GPUs. The QPU will do quantum computing, of course, and the GPUs would be used for pre-processing, for control, for error correction, which will be intensely computationally intensive, post-processing and such.
Now, if you're getting whiplash, that's because that's a stark difference from just in January when Huang said that quantum computing is decades away. Let's stay on those comments because for more, we're joined now by Bloomberg Tech co-host Caroline Hyde. So, Caroline, why the change of heart from Jensen Huang?
He can sell some chips. Maybe as an answer.
That helps.
It's interesting. We got to walk back on that time frame actually a little bit earlier in the year when they hosted their first quantum day. They're realizing that being able to foster supercomputing using quantum is going to be a real driver of growth. You can make AI, generative AI, so much more powerful with the use of quantum computers. They're able to solve problems so much faster than the best supercomputer that's currently out there with current GPUs. And so I think at the moment he's seeing an opportunity to galvanize demand and he's seeing breakthroughs. Look, we've just had IBM, local New York player, saying that in Poughkeepsie, just a couple of hours north of here, they're going to be building a quantum, an error-correcting quantum supercomputer by 2029. So within the end of this decade, they're going to be making leaps and bounds move forward. They think it's basically just an engineering issue to make sure that you're getting this correction, the errors that are built into what are very volatile qubits that are used within quantum. They think they can solve for it. You've had breakthroughs from the Willow chip over at Alphabet. You've had Ocelot over at Amazon. And I think finally we're starting to see what he now gains as an inflection point.
Yeah, Willow, he poo-pooed Willow, right? He was like, come on, this isn't going to happen for like 15 years. Now it's going to happen like next year?
Well, I think he's seeing the desire and the money from these players, and the race is on, and they can use his infrastructure once again to be able to galvanize this growth. I think you're also seeing some of the individual stocks raise on the back of this. There are different ways to be solving the quantum computing outlook, whether or not you're using algorithm, whether you're using what's known as a gate measure and use case, which is what more IBM is stacking themselves upon. But I think that we are going to see this hope, because at the moment it is so compute intensive for generative AI. It is so energy intensive. People need to see these sorts of breakthroughs if we're going to use the sort of, well, the hopes and what Paul Tudor Jones was just telling you, this breakthrough in generative AI, and needs to compute. Maybe we could see that from quantum.
Absolutely. And we're certainly seeing quantum stocks rise today on the heels of these comments. Caroline Hyde, great rundown as always. That is Bloomberg Tech co-host Caroline Hyde. You can catch her at 11. But coming up on this program, Elon Musk has regrets. The billionaire.
Okay, guys, I hope you've been listening to what the analyst from Bloomberg has been saying. I think it's quite interesting. I think the next 5-10 years is going to be a scary time, you know? I think it's going to be a scary time. Because when you think about it, yeah, with AI and supercomputers, you know, they're saying it's coming next year. You know, this is not something that's like far ahead in the future. And how is AI going to affect the job market, for example? You know what I mean? And let's say AI does take over, you know, many jobs. What is the youth going to do? What are people or workers that are doing, you know, more of an entry level role going to do? Do you understand what I'm saying, guys? Like, you know, that could cause a lot of issues. It could cause a lot of issues. And the one thing that, you know, if you are someone that is controlling a population, you don't want the population to have too much free time. Because once a population has too much free time or a lot of free time, they can now think about what's going on around the environment. They can now think about other things that's going on. Do you get what I'm saying, guys? Like it's a bit I don't know, man. I think it'll be quite interesting the next few years. Okay, looks like gold is just gonna head down lower. The hourly candles is closing bearish, incredibly bearish. We've still got 15 minutes ish. Yeah, G's dropping, S&P's dropping. Yeah, dollar just holding up. It's just holding up. This still doesn't change my bias. I'm still bearish overall. Gift says, just look at how the high street has changed over the last 10. Yeah, yeah, exactly. Exactly, Gift. Because my whole thing is, you know, innovation, boom, 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 you know, jobs being created. That's going to obviously grow an economy. But it's like, yo, if we get robots to do, you know, what we're supposed to do or what we've been doing for so many generations, then what does that mean for the time that we have? Because essentially we can't control these robots. Their computational powers are going to be 100 times better than us, right? 100 times smarter than us. How do we know they can't create some sort of tech that can control us, or some sort of tech that can, you know, transcend time? Like, the honestly, like, the options are endless, to be honest. Like, the options are endless. And you know, like you said, Gift, it is a scary time that we're living in right now, because we genuinely don't know what could happen. Like, we don't. Alright, here's what we're gonna do, yeah? We're approaching the closure of the hour. I still like the fact that EU hasn't taken out that low. It's still holding up. I still want to see the dollar drop off. Yes, it is pushing up right now, but I'm still bearish on it. I don't know when it's going to drop off, unfortunately. Gold, it stops beneath that low. If we can just hold that low for dear life, we might be able to get something out of it. Okay? If we don't, then we don't, right? But the hourly candle, or this hour's candle's closure, is going to tell us more than enough. Alright, guys, I'm going to call the stream there, man. I'll update you guys inside the Discord, yeah? Monday, Monday.